The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Welcome back once again here to Market Talk. I'm Susan Littlefield, filling in again, like we said, for Jesse Allen. Jesse will be back with you tomorrow. Lots of things happening in this marketplace today. We're going to break down all the happenings on this grain complex. We saw the corn just squeak by to put some green on the screen today. And we know soybeans have been closely watching these talks between China and the U.S. I'm excited. It's been a while since I've had the chance to talk with Brian Doherty. Brian, of course, is with Total Farm Marketing. And Brian, as we look at this market, let's start out with this corn complex. I mean, 3 consecutive days now. We got some green on the screen for them.
Yeah, it's kind of funny how this goes. And by the way, thank you, Susan, and nice to see you. We've had a kind of a long relationship, so it's good to be back working with you. So yeah, corn 3 days higher in a row, pretty good gains in the new crop again, and more importantly, good closes. So I think we had 6 days in a row down, now 3 days in a row up, and when you kind of put it all together, it's not moving anywhere really fast. So the bulls will argue, look, that's a victory. This is a time of year when you really look at the rainfall totals and planting progress and the fund money being short. This market could have just continued to erode and erode. And instead, last week, or 3 days ago, actually, when the market hit December corn 434 area, again, it found buying interest just like it did the previous time. So we're at a time of the year where the market starts to focus toward weather more than I think anything else. So the expectation is 2 things. One, Brazil's got a big second crop corn. That's the wet rag over the market. 2, U.S. weather really starts to matter, and so do temperatures, rain forecast, all of that. The crop is on schedule, 93% planted. That's in line with the 5-year average on the USDA's crop progress report, Susan. That was on Monday. There may be some areas that received additional moisture that might go prevent plant, so that's a little bit of a wild card there, but not as much as I think people might have thought 10 days ago. Big picture, we love the demand side, but we've got this crop in South America overhanging the market, and we don't have the fund money where they switched and are going long right now. Best as we can tell, there might be some short covering into this rally. 6 to 10 day outlook, you just can't find a lot in there that really can feed the bull right now. Maybe you can with above normal temperatures in the Western Corn Belt, but so is expected rainfall.
You know, you're one of the first I've heard talk about the word prevent plant in a while. I think everybody was kind of waiting to see what this weather did. But, man, there's some areas that are pretty soggy.
Well, there are. And so the question is the farmer going to say, look, I'm just done? May 31st was the prevent date for many states, others June 5th. Well, here we are, June 5th. So there will likely be some. There's always some problematic and troubled spots, and I think the market recognizes that. It's just we don't have a lot of data coming at us to suggest that it's significant. And that can be backed up by what the market does. The market really isn't voting on a big acreage decline, but it's one of those additional sort of drops in the bucket that the bulls might sink their teeth in down the road. I'm kind of a believer in the law of averages with weather. We have periods of too wet, periods of too dry, too hot, too cold. Mix it together, and the temperatures and rainfall have generally been good for the Midwest. That's why we were noted as the breadbasket to the world. But it's been kind of cool in recent weeks. And when you think about that, you go, well, what's the opposite of that when we're above normal temperatures? So nobody in the Western Corn Belt that I know is really resting on their laurels of this moisture this spring. It was so dry to begin with. And you've got some reprieve, got the crop in the ground, got a good start. Now it's timely rains. The bulls might be starting to buy into this idea that, look, we're going to probably see, if you look at the NOAA maps, if you believe in the 89-year drought cycle, we're going to see some periods where it's going to be hot and dry. And at 440, 450 a bushel, the end user should really take a hard look at what that value means to them over the next 10, 12 months. Corn prices could quickly rally. We all know that. It's common sense. But now the rubber hits the road here mid-June.
And you look at all this, and we've been talking about how this could have some weather-related pushes throughout the growing season. You talk about July, you talk about August could be extremely warm as well. But then look to our neighbors to the south, trying to get a crop out of the ground. And now they're getting some rains, and some say quality might have some issues.
Well, you're right, and there's a lot of things when you look at big picture too that may not be related to corn directly, but indirectly. And I'm going to talk about the wheat market for a minute. When you look at some of the dry weather in China, when you look at some of the dry weather in Ukraine and Russia, then the war, and then dry weather in Canada, and maybe some quality concerns in the U.S., and then look at Argentina having a tough time with some big flooding, trying to get the crop in timely. The wheat market's also sort of a interesting study that it could certainly become a leader or lead the way higher. There just hasn't been that catalyst to sort of push the market. So I don't want to give anybody false hope here, but the reality is volatility could be just around the corner in these markets. And I would say that if you're following the corn, beans, wheat market, you've been kind of so beat over the head the last 3 years that to get a 25, 50 cent rally in corn seems like the end of the world, where several years ago, there were many who thought we'd never see sub $5 corn. So it's getting interesting is my point. Stocks to use on the world front with corn, 13-year low levels. You take China out of the mix. When you take their supply out, it gets even tighter. So it could get really interesting. The point of the matter is it's time to really, as a producer, think strategically. How do I sell if we get a rally? How do I sell into the rally without, feeling like I'm selling too soon if it takes off? Yet, how do you cover that? So it's time to really start pushing a pencil to it. Have good conversations with your advisors. Get your call options in place now if you're willing to put the cart in front of the horse, and then put orders out there to sell, Susan, and just
Hmm.
let the market sweep those up and get sold. The market has a tendency to rally, but also tip over really fast.
Do you have any worries from a grain farmer's perspective as they look at their this marketing and the options that are in front of them? Like you mentioned, the war is going on, the peace talks that have kind of fallen apart, China and the United States.
Yeah. Do I have worries as a farmer? I have worries. Yeah, everybody's got worries. There's just not enough cash flow.
Okay.
That's the bottom
Right.
line, right?
Okay.
When you look at this big picture, you don't really want to be in a position where you see a rally come and go and miss it. That's that would be heartbreaking. So it's really a matter of, if we get to rally, how do we, make enough sales that matter? How do we keep ourselves balanced? So for me, in my discussions with producers, it's really about creating a balancing act so that, y- let's just say we run into a dry stretch in the market, all of a sudden doesn't stop at 480, but goes to 580 or 680 or 780. We've been there before. How do we position to not get run over yet? Let me take you back to 23. Same type of pattern. Funds were short 120,000 contracts or whatever it is. Same week as
Mhm.
this year and the year before. In 23, they quickly reversed out of their positions. Corn rallied well over $1, went to about six and a quarter, and as fast as it did, it quickly rallied or fell apart back under $5 a bushel. So you had to pivot from bullish to bearish almost overnight as the weather forecast changed. So that's what I mean by making responsible sells at prices that matter, but not getting run over if we have a dry weather pattern or some type of weather event that really pushes prices a lot higher.
Do you think, Brian, a market kind of waiting with bated breath? We knew that there's supposedly a phone conversation that happened this morning between the two presidents, and then the compliments, kind of backhanded compliments, maybe that were put out on social media yesterday from President Trump talking about President Xi.
Yeah. I've always said it's hard to outguess what politicians are going to outguess and do. So, so that's always a challenge, right? So there's two ways I'm looking at this. One, stay on top of this, be prepared, recognize that the world's different with this administration than the previous administration. Yet I also want to take one step further back, and let's just say you hit your head shortly after President Trump's been elected, or let's say in December, and then you woke up yesterday or today. Take a look. There's not a lot that has changed on the world front. Look at the stock market, look at our export sales, and look at them in corn. There's a lot here that hasn't really changed. The market is trading fundamentals. The trade is certainly important. The world recognizes that, and I think ultimately in the long run, Tariffs are something that gets factored into price, just like tax breaks or tax increases do, and then the world moves on from there.
Looking at export numbers, very another disappointing week happening for the soybeans.
Disappointing for soybeans. If you're looking for a big, robust number, right? That wasn't there today.
Right.
I'd have to look. I think we're 7 million on but corn had a good number again. And so think about that. We're not selling any corn to China, but this market is still what, 500. Last week was 500, I believe 51 million bushels ahead of the same pace last year. And I didn't calculate the numbers today. Suffice it, they're the same. I think 27% ahead of last year at the same time. So you're disappointed in soybeans. Brazil's kind of got the supply available to the world right now, and the market's going to, pick and choose and ebb and flow. But it looks like, from what I can tell, U.S. beans are competitive on the world market. So I wouldn't give up on exports just yet. I really do like the pace of corn, and I like the way that corn continues to find buyers. And I like the kind of behind the scenes stuff that you hear about. Look at the news this week on Vietnam and some trade potential and some deal there. The third largest importer of corn. That's big news, big stuff.
Yeah.
I'd like to say that at these current prices, tariffs, no tariffs, do tariffs really matter? A 10%, 20% tariff on $4.50 corn? It's If you need corn, you're going to buy it. You're not going to buy it, right? So that's the way I'm going to view that.
I want to dive into this livestock market. Extreme cash strength. Wow. 3 to 8 plus higher for the South. Waiting to see what the North is going to do as the clock is kind of ticking away for them. What is your takeaway of the way this cattle market's trading this week? And who would have ever thought we would have seen
Yeah.
the jump that we saw again?
Right. And we're just seeing these historic numbers, and so you look at it from all angles and go, well, can demand hold up? That's what everybody's question is. Can demand hold up? So not too often am I surprised in a market, but I've been surprised the last, let's call it, week or two in the cash cattle market. You kind of think that the buying interest would have waned in front of Memorial Day, or right in this window here in front of Father's Day, um, maybe the 4th. And it just looks like the cash just doesn't let up, and it heats up, and the cutout values continue to push into new values, new high values. So the question is, well, what's going on? Because what are the consumers really able to afford this, right? Can they chase it? And are we really exporting that much, or are we really that tight in inventory? And this is just my opinion, but I'm starting to settle on the idea that the consumer continues to buy. Those who have the money will buy almost regardless. They're going to eat beef. They're going to eat beef, right? They're going to go out and get their steak. But those that are on the bubble, I wonder, in the retail sector, if it's been recently a matter of cutting portion sizes. So you're keeping the price at wherever, $22 for a sirloin, but it's not an 8-ounce sirloin anymore. It's a 6-ounce, 25% less meat. So I just got to wonder if maybe that isn't what's keeping the market finding the demand, is that the portion sizes are smaller. I know that's a bit far-fetched, but when I look at where prices are, historically, we kind of have ebbs and flows. This has been just a steady grind, steady grind, steady grind. Or is the cow calf guy really holding back more heifers than we think, and we have less on the, and maybe it's a combination of all that. But I think from a producer's perspective, what I'm wanting to hear from Brian is, well, how do I handle this? I think you need to use put options. I would be careful to be hedging and get run over in this environment, but I would invest in the idea of putting price floors in, and if need be, roll those higher.
Do you think, as you look at this, I mean, obviously there's going to be some nervousness within this trade for these cattle producers as they look at wondering, as fast as it's gone up, we always know that elevator can crash pretty quick.
Right. So really don't focus too much on what I just spent a lot of minutes focusing on trying to figure it out, because it
Right.
may not be figurable. Just recognize that volatility is high. To your point, Susan, what goes up comes down, right? At some point, if this thing has inertia upward, that inertia lessens and the rocket ship comes back down. So I think you concentrate on the strategy. And I know people are asking, well, gosh, should I continue to chase these feeders? I've chased these feeders, and by golly, it seems to have worked, unless I've contracted too soon. But at what point? And that's a market too where I think more people are probably wondering, do I reload my feedlot or do I not? So if you do, there's a couple of things that I think you should do. One is continue to look at all risk management tools. And then two, make sure, let's circle back to corn. Let's make sure that if you're putting cattle in the feedlot, that you're feeding, let's put a 4 in front of corn and not 6 in front of corn or 7 in front of
Right.
corn because you didn't think it was going to get that dry. Don't try and outguess the weather. We've all been humbled by that.
Looking at, and I want to get your takeaway. This is the first week we've had an increase in the daily limits. There's been some discussions floating around about cattle having overnight trades. We've been there, done that before, and we know how that turned out.
Yeah.
Is that something you want to kind of talk about to that cattle producer that's listening to you talk?
Well, it's not your father's contract in the size, right? So,
Mhm.
not to show my age too much, but showing cattle at the county fair when I was young and we could get 75 cents a pound was a huge deal. Right now, it's in the marketplace $2. My point is, it's a lot of money. That animal's worth a lot, and the contract's worth a lot. So the contract on futures is 40,000 live weight, depending on the weight of your cattle, roughly 30, 32 head, somewhere in that range. Um, but the value of that contract has doubled in the last, let's call it, decade. So it's a lot of value in this contract. So the exchange is probably looking at ways to develop other avenues of revenue and markets for farmers or for producers or for end users than a contract that just keeps getting larger and larger in value. And we did see this. So I know I'm way off in left field here, but we did see this in other markets. For instance, I'll take the Dow Jones Industrial. That is an index that's traded on futures, and it was $5 a tick on the mini Dow. So when the Dow was at 10,000, it's a $50,000 contract. Well, also the Dow goes to 40,000, it's a $200,000 contract.
Okay.
I shouldn't say all of a sudden. It took 20 years, but my point is the contract value increased to 200,000 from 50,000. Cattle have increased. I wouldn't be surprised if we see something come that tries to make the trade a little bit more palatable rather than a $7 range. Or what I think the limit's what, 725 now. I think the point of it is that in a day could be over $14. That's a lot of value to try and work with. So I wouldn't be surprised if they come up with some other contracts. As far as the night trade, I'm in the opinion that unless you have a market that's really liquid and traded kind of worldwide, I don't think that's a good idea. It just leaves too many
Mhm.
windows where large orders can come in and really shake the market.
Or some rumors like we've seen the last couple of weeks.
Well, that too, and
Yeah.
that's I mean, look at the squirrel worm Missouri rumor and how quickly that changed the fortunes of the market. I mean, just at a snap of a finger, right?
Yeah.
And then that proved to be, I guess, fake news. And but you're right, things happen. So I'm not a big fan of this around the clock trading. So that's my opinion. I'm not a big fan of it.
Let's talk milk. What are we seeing for our dairy farmers?
A lot of volatility. We did see some really fast retracement and great demand for cheese, and it punched prices back up into the $20 zone, only to fall apart pretty quickly. And I shouldn't say fall apart, but when you lose nearly $1.50 on $20 milk, that's enough to say it's pretty volatile. Um, Good support in the milk market, a lot of back and forth. It's trying to find its way. The weaker dollar since January, the pushback on tariffs have all been helpful and provided good underlying support. And the I'm going to say the limit of production capacity is also to a point providing underlying support. But I know people don't want to hear this, but I just don't think we're in an environment, Susan, where you're going to see 21, 22, $23 milk. there's an incentive to get that beef calf on the ground and keep the cows producing and keep heifers in the herd and provide for good revenue on the beef dairy side.
Mhm.
And then you've got a market that seems to be historically very kind of fickle. When milk gets in that $20 area and cheese gets a little bit higher than where it is, it seems like demand sort of filters out fairly quickly. So we don't spend a lot of time much higher. Are we in a new paradigm in cattle? That means we're in a new paradigm for milk where, we're going to finally see milk reach 20 and then stay above 20. I just don't think so.
All right. Lots of great conversations from you today, Brian. Appreciate your time on this Thursday.
Well, thank you. Appreciate the opportunity.
Brian Doherty joining us, of course, with Total Farm Marketing. And that is this Thursday's edition of Market Talk.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.